Welcome to Squawk. I'm Bruce Whitfield. With me, David Shapiro and Chris Gilmore. Coming up tonight on Squawk, records tumble as the JSE sees investors develop an appetite for risk. Aspen firing on all cylinders as Brian Joffe gets at least one last chance to pitch for Adcock Ingram. Burgernomics as Johan Burger becomes the Deputy Chief Executive of FirstRand. High-flying Comair delivers stellar results as SAA unveils its 9th turnaround strategy in about as many years. As NUM settles its gold mining dispute, AMCU flexes its muscle. And just how much would you pay for space travel? Bob Geldof has got a price. All of this and much more coming up tonight here on Squawk. Thanks for joining us on Squawk. You're watching CNBC Africa, first in business worldwide. David Shapiro from Aspen and Chris Gilmore from ABSA Investments here for another weekly market roundup on what's been a very spectacular week. Lots of results, lots of big stories out. And I suppose one of the biggest, and you've been to the presentation just this morning and you survived it because it was a 2-hour marathon session at Aspen. But what a spectacular business. What a spectacular results. What a pity there wasn't a radio version of the results.
Yes, perhaps a condensed version. But I have to say, I mean, they do this every year, and it's a wonderful experience, Bruce, because there's just so much information packed into that 2 hours. And to listen to Stephen Sard, he's just so incredibly jacked up and knowledgeable and passionate about his business. You rarely find that these days.
How old is Stephen Sard?
Late 40s.
I think early 50s. He's well under 60 though.
He's 49 years old.
49.
He's the 7th richest person in South Africa, the 17th richest person on the African continent from a business that they acquired 15 years ago and listed at what price?
R2?
No? David?
It was a backdoor list. It was SA
Druggist. Yeah.
I couldn't tell you.
Mid-50s, about 55 cents a share. They're trading now at over 250 Rand a share, a return of 500 times over the last 15 years.
You know what I love about Stephen Sard, and this is what one wants to look for in the market. Companies, people like Stephen who can actually turn small companies into big companies. You know, it's a talent. We get a lot of listings, Bruce. And Chris knows that you get a lot of companies who come on, and you get managers who think they can grow companies. They can grow them to a certain size, and what happens? They start to fail because they haven't got that talent.
Yeah.
Okay. So
Joffe's one, Sard's one,
but who's
Hedwick's one.
Adrian Gore.
Yeah, but who are these guys? Adrian Gore starts from scratch. A lot of these guys bought businesses. Bill Lynch built a massive imperial business from nothing in a lifetime. The FirstRand guys built FirstRand within lifetimes. Aspen has been built in a lifetime. Pinnacle Technology, a PSG in a fraction of a lifetime. With Capitec, EOH, all of these great businesses. So who are the other 5 people we've not yet heard of who are going to do that over the next 10 to 15
That's
years?
what you have to look for. And those are the people you have to identify. They'll start to emerge. You know, Buffett always used to say, he was asked a question, if you're in a class of MBAs, will you be able to tell who's going to rise? And he says, I don't have to. I buy businesses with that management already in place. And that's what we look for. That's my strategy at the moment. Stay with those managers because they're going to keep on delivering. They've got that passion.
You stay with the tried and tested guys who have seen, say, for example, Aspen went from 55 cents to $100. $100 Aspen was ridiculously expensive. But at that point, if you bought your Aspen shares, you've made 150% return. Awesome. Thank you very much. We'll take the money.
Chris was tortured this morning in the, as I was using Wayne McCurry, he said, we were tortured this morning. We had a presentation. But I think that you can still buy Aspen. If you listen to what he says, if he can, he's got what's a 20 billion Rand pipeline of projects that are coming on. And these are operating. These are not new factories or anything, they're already operating. So if he can turn that around, this share doubles 2 or 3 years.
Yeah, but that's the point, isn't it? And it's a great business, great management. Stephen Sard has led that business very effectively. He's a chartered accountant. He hasn't got a medical background at all. He just saw that it was a great business that was making lots of cash, and he could actually do well at it.
Actually, a lot of chartered accountants. Joffe,
there are.
Kosov,
Sard.
Not Kudufani. Who else? Sard.
No, I once did an exercise for FinWeek magazine because I was determined to prove that chartered accountants shouldn't run businesses. They're uncreative. They have absolutely no imagination. So we spent money on research. research and did all of the variables and got the results back. And out of the top 40 companies, about 16 were being run by chartered accountants at the time. 7 out of the top 10 best performers on any metrics you looked at were run by chartered accountants. So, as a former journalist, do you understand? So what do you do when the facts ruin a good story? You change the headline. You change the headline and say what wonderful guys chartered accountants are. But it is a fact that businesses that have been run by chartered accountants have outperformed those run by industry professionals.
That's why I keep telling kids, don't do the CFA. Just become a chartered accountant, because you understand businesses. You understand exactly how they operate.
And it's a good discipline.
Exactly.
Okay, so another one that's going to be interesting to watch. I know you're a chartered accountant. That's why you're so successful. Adcock Ingram has been under offer for quite some time. Brian Joffe made the first bid. He was laughed out of town on technicalities. He hasn't come back. And then yesterday, of course, CFR of the Chilean family business, which wants to do an Aspen. Aspen is his role model. The man from CFR told me the other day that they would love to see that happen with Adcock Ingram and their businesses that they've got under their wing already. $73 is the valuation or thereabouts. It's a good, nice premium.
It's a nice price. But as Brian said yesterday, in a statement, this is not going to be decided by the board. It's going to be decided by the shareholders, and rightly so. And I suspect now the fun is going to start, because you're going to start getting probably a bidding war taking place. But I think the one that will win is the all-cash deal. Because if you see the opponents of this deal at Oasis, for example, in Cape Town, they're saying, we don't necessarily, and I'm paraphrasing here obviously, we don't necessarily understand too much about CFR. We're not that enthralled by it. We'd like to see an all-cash deal, and probably a bit higher than this as well. And they were quite successful a few years ago. What was it in the Petronas Engen deal? When they opposed
Oasis, yes.
Oasis, yes. Oh, yeah. Sure.
Yeah, and I think they'll probably make
it's going to be very interesting. There's a lot of cash in this offer. It's more than 50%.
Yeah.
So that's the sweetener. There's so many questions to be asked about CFR. It's a good business, but if you study the balance sheet, and we're only starting to get the information through now. First of all, it was listed in 2011, 73% owned by family, very small float. We don't know Santiago, we don't know what the performance has been there, etc. So you're taking a risk. There is a big risk by accepting the shares. It might turn out to be a very good risk, but I mean, there's a lot of unknowns.
Yeah, I met Alejandro, the chief executive of CFR. Nice enough bloke, but without seeing the numbers, it's a much harder sell.
Yeah.
And the South Africans are going to have to make that choice. FirstRand's results out this week. Again, no missteps.
Stunning. I think they're great. I think I'm switching now back to FirstRand. I mean, I've had in the other banks. I'm saying no, just go with.
Is FirstRand a better investment now than it was under its founders?
Without a shadow of a doubt.
Yes.
Without a shadow of a doubt.
It's amazing, isn't it? The founders were creative. They developed new businesses. They created Discovery and Outsurance and lots of new businesses.
It's great.
They also lost billions of rands in proprietary trading at Seven Oaks in Kent.
But correct me if I'm wrong, we were talking about CAs earlier. You've got Sizwe, who's a CA, and Mr.
Laurie Dippenard is a chartered accountant as well. I think Paul Harris may have been. I'm not sure about GT Ferreira. But yes, and Johan Burger is a chartered accountant.
They started from nothing. They started not knowing anything about banking. They just made the bid for it when Barclays was pulling out, and they got it.
Yeah.
And they said, hold on a sec, we've got a bank. What do we do now? Exactly. And I think that all credit to them, because they formed the basis on which we've got this really good bank now. Yeah. But I think it stands out, and I think at these levels, don't fool around in Able or Capitec or anything. Just buy FirstRand.
Don't fool around in those ones, because the money's been made in those, is it?
Yeah.
When you look at the shuffling of the deck of cards at FirstRand, Johan Burger, was the financial director, became chief operating officer under Sizwe Mfasana. What's the significance of his being appointed now deputy chief executive?
It's debatable, isn't it? I mean, Johan's been doing effectively that job for quite some time, the deputy's job, I mean, I was at the presentation. I go to a lot of these presentations, as you're probably aware, Bruce, a couple of days ago.
I've heard this, yes.
Yeah. And, the place was absolutely packed. But he spoke for most of it. Sizwe did the kind of overall strategy. He's more of the kind of mechanical type of operational sort of thing. So I think it's a wonderful nexus between the two. I think it works very, very nicely.
Yeah, it's
I
interesting.
shot the sheriff.
But I didn't shoot the deputy.
Shoot the deputy down. Yeah.
Okay, well, maybe that's what he's hoping. Okay, but first round results get the big thumbs up. Nice, it's a nice pick. It's not particularly expensive on an historical basis.
Not at all.
But I just wonder where the next trick comes from. That's
they don't have to have tricks.
Yeah.
But surely they do. Where did you can't grow organically in this market in perpetuity?
They'll go into Africa.
Yeah, they're into Africa.
Way.
Yeah.
In a small way, but does that generate the returns?
You know
it's
what?
not doing it for
I looked at
Barclays,
MMR's
Africa, or
results
Standard Bank.
yesterday as well. I just looked at the results. I said, hold on. In this kind of market, I don't have to take big risk. As long as I've got a nice, steady performer giving me a good dividend yield that's going to increase at a reasonable pace, I'm quite happy. When we get into a full-blown bull market, where global economies are pumping, then we can start to look for aggressive types of buys.
Here is a trivia question for you that you probably don't know the answer to, which is why I'm going to ask it. MMI bought a business on the lovely island of Mauritius recently, and whenever they buy new businesses, they invite internal applications for the chief executive job on the new acquisitions, and they get one or two usually for their African acquisitions. Mauritius, part of SADC. How many internal applications were there to run the Mauritius branch of MMI?
Quite a lot, I would imagine.
Yes.
A
David,
lot.
a number?
I have no idea.
Fewer than you have ties. Only 200.
200 applications.
200 internal
Could
applications
actually run a business in.
to go and run the business in Mauritius.
What were the requirements to run the business?
I think whoever would could take the lowest salary. You want to go live in paradise?
I
you
always
get the
say
lowest
to
salary.
become a stockbroker, you only know 3 words. Buy, sell, and hold. That's it. So I don't know what it is to run the MMI.
Tragically, they've already filled the job. I checked with Nicolas Creer. But all of these life companies are reporting spectacular results, and it's not from the capital that they hold and that the market has been robust. They actually are selling insurance policy. They are selling policies and
Distribution.
investments. What is it that is enabling all of these guys in quite a depressed environment to sell as much insurance as they're selling?
Distribution. They've got armies of people that go out and sell. And there are hundreds of people
But they've
out there.
always had armies of people
I
that go
know.
out and sell.
I think they're fine-tuning it, becoming a lot more efficient in the way that they do things. And we can't compete. I can't compete. If I started an asset management business now, no matter what my performance is like, if Chris and I decided to go down the stairs and we'll never shape, no matter how clever we are. We haven't got that distribution. We haven't got the people. Look at Discovery. What's the secret behind Discovery? Just
Sell.
sell.
I mean,
Liberty were masters at that.
Yeah. Discovery has no portfolio management capability that I'm aware of. It's the white labeling other
It's
people,
all outsourced,
and yet
yeah.
it's all about distribution. You're quite right. It's incredible.
Yeah, it's been genius, and that's why all of these guys are doing incredibly well at the moment. Sasol's results also spectacular, but how much was luck with a bit of a higher oil price and a considerably weaker rand versus operational genius?
I think the former, particularly the rand-dollar exchange rate, that helped them immensely. So, look, this is a great company. It's got great technology, but I think if you're going to be buying this, you're going to be in for the very long term now, because they've got so much capex coming, particularly in the US. That's going to be huge.
That's $16 billion.
Yeah, it's massive.
That's $160 billion. I
And
always
that's
use
in today's money right now before they start
that's
spending
10
it 5 years from now.
10 times the size of Pick and Pay. That's
Yes.
what they're betting on Lake Charles in Louisiana.
And see, the only part of that story that begins to worry me is that the US is becoming increasingly self-sufficient on fuel. And at some point, that's going to have a negative impact on gas prices, because gas prices are fairly elevated as supply is coming on stream. By the time they're ready to exercise their supply, what's happened to gas prices in the US? Because there will be surely a glut, an oversupply in that market.
But they're using the gas to convert to diesel.
Yeah.
That's the one thing. And then they've got the cracker plant.
Yeah,
I
which
love
is
the
really-
cracker.
Yeah.
I love the cracker plant. The story about the ethane cracker.
Ethane cracker, yeah.
It sounds like a
Which
movie
is
actor.
more chemicals.
Yeah.
Which is the input into factories and that. So I think it's a very bold bet.
But I think it's going to be interesting, and David Constable won't discuss it at this stage, is their cost initiatives, and they're going to cut jobs, and they're going to be terribly unpopular, and they're going to feel the wrath of the Department of Energy, no doubt.
Yes.
When they start looking to cut 3 billion rand in costs, and a lot of that's going to come from inefficiencies within quite a bloated South African environment.
They're emigrating.
Yeah.
Wherever you look, we've got what I refer to as a dinosaur economy here. We've got so many outdated practices, and it's very scary, because even with those outdated practices which mop up and like a sponge so much unskilled labour. Once you start mechanizing more and more, as you talk about there, and in the mines, unfortunately, a lot of these guys are going to go. I mean, for example, and I'm changing tack a little bit here, we saw although it is related, I suppose, to an extent, the people who pump gas,
yes.
Petrol, going on strike. And I think it was Michael Bagram who was quoted the other day saying, we're one of the few countries in the world left who actually have pump jockeys dispensing petrol.
It creates 80,000 jobs. That's at 3,000 rand a pop.
Therein lies the dilemma. Yeah. Exactly. It's problematic.
It's almost a social wage that South African motorists will pay.
Yes.
Because also, it's in a litre of petrol, and I was speaking to the fuel retailers this week about the profit margins made on fuel. They make 99.2 cents a litre profit margin on every litre of fuel that is sold. Of that, about a third is spent on wages. So you cut out the guys who pump the fuel, you save 30 cents a litre on fuel. It's a minuscule drop in the petrol tank.
Yeah, you're right.
So rather keep people employed with a social wage and take the occasional disturbance rather than chuck people out in the street and have to pump your own fuel for a marginal saving anyway.
But it distorts. I think it's reflective of the distortions that we have built into this economy.
No, that's a very valuable comment. We're going to talk about Steinhoff. We're going to talk about other companies that have been in the news this week, including Aveng and Comair. All of these companies have come out with results this week, and most have been good. Aveng, of course, was massively disappointing. We'll take a break in just a moment, and if you've ever felt the need that you have to have some space, well, it's been experienced by the guys like Mark Shuttleworth. Of course, he experienced what space was like. Richard Branson can't wait to take his family to space. Elon Musk is offering one-way tickets to Mars. Well, if you want to experience space and come back, hopefully you can have it. More about that coming up in just a moment.